Across the Arab region, finance is entering a defining moment. Digital identity is no longer a technical enabler. It is the strategic key to unlocking inclusive growth, trusted finance, and cross-border interoperability. This perspective, emerging from the Arab Regional FinTech Working Group, reflects a shift we at CryptoMinds see accelerating across the region. The challenge is clear. Despite strong economic fundamentals, the region faces a persistent inclusion gap. Formal savings and borrowing remain below global benchmarks, and although MSMEs account for nearly 90% of all businesses, many remain excluded from basic financial access. Digital identity is the gateway to closing this gap. By replacing manual onboarding with digital eKYC, institutions can reduce onboarding costs by up to 90%, cut processing times from days to minutes, and significantly raise assurance levels through cryptographic verification. But inclusion cannot come at the cost of integrity. Regulators and financial institutions must balance access with AML, CFT, and systemic security obligations. A robust digital identity framework makes this balance achievable, aligning innovation with FATF compliance and risk-based supervision. At the core lies customer due diligence. FATF Recommendation 10 defines 4 pillars: identifying and verifying customers, identifying beneficial ownership, understanding the nature of the business relationship, and continuously monitoring risk over time. Digital identity transforms these pillars from static checks into living, auditable processes. Yet adoption faces real hurdles. ID coverage remains uneven. Many systems lack strong digital authentication. User experiences are fragmented. Pricing models are often unsustainable. And critically, regulatory clarity around data privacy, consent, and outsourcing is still evolving. Global pioneers show what is possible. Singapore's SingPass evolved into a national digital trust ecosystem. India's Aadhaar demonstrated how identity and payments can scale together. Nigeria's BVN proved that centralized biometric identity can dramatically reduce fraud when governed correctly. Importantly, the Arab region is not starting from zero. Egypt is testing innovation through regulatory sandboxes. Kuwait has operationalized the mobile civil ID. Saudi Arabia and Jordan have formalized national eKYC frameworks. The building blocks are already in motion. Regional leadership is emerging. Bahrain implemented a national eKYC utility using cloud and blockchain technologies. The UAE launched UAE Pass as a trusted digital identity layer, complemented by a blockchain-based KYC platform for corporate onboarding. To scale these successes, a coordinated policy framework is essential, one built on 5 interdependent pillars: legal and regulatory alignment, private sector collaboration, strong oversight mechanisms, continuous risk identification, and enforceable customer consent models. The first foundations are clarity and trust. Regulators must encourage interagency coordination, adopt technology-neutral guidance, and mandate privacy by design. Data protection impact assessments and cyber resilience planning are no longer optional. They are prerequisites. Equally important is enabling the ecosystem. Digital identity must support provable, traceable consent, open APIs for innovation, and transparent oversight structures that clearly define institutional roles and accountability across the value chain. The moment for action is now. With strong demographics, digital penetration, and regulatory momentum, the Arab region has a unique opportunity to leapfrog legacy systems. By acting decisively and collaboratively, we can bridge the inclusion gap and build a resilient, trusted digital financial future, one that CryptoMinds is committed to helping design, govern, and deliver.